Yo, 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 welcome, welcome, welcome. Today's August 19th, 2024, and it is a Monday. Today's video is going to be recapping the trades that I took today, or trade that I took today. And yeah, let's get right into it. Alright, so first things off is I do want to start off on the 4-hour time frame here, just to see what we are looking at here on NQ. So coming into today, I already realized that, hey, prices had already taken out previous week's high during like the Sunday open. Quite literally, like I think 5 hours has passed after the Sunday open, and we take out previous week's high and previous day high on NQ. So in this morning, I wanted to see if we can. If we could, retrace back into this daily fair value gap. And it looks like we did not. So we didn't retrace back inside this daily fair value gap. And so I was now then, just patiently waiting for an intraday setup to occur. So I wasn't really trading like the higher time frame models. But I was trading with the idea that, okay, we're probably going to I'll only shoot for, lower time frame objectives. So whenever I say higher time frame objectives, there's London lows here, there's Asia's highs still here intact. So those are session liquidities, but there's also, hourly liquidity, 6-hour liquidity, whatever. So I was just basically aiming for, maybe 15-minute highs, hourly highs. And yeah, so during, about 10 o'clock, we dipped down towards London lows, but we did not get a 15-minute bearish closure here. We actually closed really bullish here, and we started to expand higher. And notice how we are trading below the monthly open at this time and the weekly open as well. So that's, just keep in mind that we are buying, our prices are below the opening price, and there are key levels, because this is the monthly open, this is the weekly open. Hold on, I'll be right back. Alexa, turn off my bedroom light. All right, so after I noticed that we had this really bullish closure here, that was when I was like, okay, well, prices, it appears that we aren't as bearish as I thought we were, and let's just see how we are going to treat this 30-minute or 15-minute bearish fair value gap. So once we get a closure above that 15-minute fair value gap, this now becomes a inversion level, and it's also telling us that, hey, we're not bearish, and we are quite bullish. So we got like I said, we got a 15-minute closure above this 15-minute bearish fair value gap, and we also created a 15-minute fair value gap as well on NQ. So the trade that I took today was actually based on how we reacted to this 15-minute fair value gap. So I don't really like entering trades based on we create a fair value gap and I just enter off of that. Especially when it's on like the higher time frames. I'll do that maybe on the lower time frames, right? But like I said, I wait to see if we can get some sort of reaction to this 15-minute fair value gap. And here you can notice we dipped into this 15-minute fair value gap, but I never really got an entry map or an entry pattern to get target 15-minute highs here. And notice how Asia's highs are still intact here too. So I actually wasn't able to really be a part of any of this move. So it wasn't like I was just waiting for a model. So I wanted to see some sort of reaction to this 15-minute time frame and get a bullish 15-minute closure after tapping into this 15-minute fair value gap. But we didn't get that until I think 12:30. So the trade that I did take today was actually based on this 15-minute candle here. So this 15-minute candle, we retraced back inside this we retraced back inside this 15-minute fair value gap, right? So let me look that up. 15-minute fair value gap. And it looks like we came into it, we came down into it, and then we started to displace higher. And notice how this 15-minute candle closes here. Based on this 15-minute candle's closure, I could anticipate for us to take out this 15-minute high. Oops. So I was anticipating for us to take out this 15-minute high with the next 15-minute candle. So whenever prices closed here, whenever prices closed here at 12:45, we dipped into a 3-minute fair value gap. So let me note that out as well. So that is a 3-minute fair value gap. And notice how these time frames, or like the entry models here, they're all fractal. Notice how like I said, I don't enter based on this, solely based on this 15-minute fair value gap. However, prices is fractal. So whenever we got a reaction to this 15-minute fair value gap, we created a 3-minute fair value gap, which I entered off of because the risk is a lot. Look at the amount of risk here. If I were to enter here on this 15-minute fair value gap, let's put this on the 15-minute time frame. So if I were to enter on the 15-minute time frame, right, and I enter on the 15-minute fair value gap, I would have to have my stop loss here, and my TP could be Asia's highs. If that were my entry, what is the amount of points that I'm risking here? 47 points. However, if I were to take 3-minute model or in the 3-minute fair value gap, I'm only risking 6.5 points. There's a significant difference there between the margin. So I usually go onto the, like I said, I go onto the sub 5-minute time frame to find a sub 5-minute fair value gap that I can enter off of, and there was a 3-minute fair value gap in this case. So one thing that I do want to know here as well is ES has yet to take out this high as well. So we still had like draw of liquidity here too. So we didn't take out this high here yet on ES or YM. So there wasn't any SMT divergence. So that was something that I did want to note out and keep in mind whenever I was coming to this week. So that's something that I had in mind whenever I was taking this trade, was that we have yet to take out this high. So all three indices have more room, or have room to continue higher. And like I said, Asia's highs hasn't been taken out yet. So we that is also another objective that I was hoping for prices to take out there. And yeah, like I said, I enter on the 3-minute fair value gap. 3-minute fair value gap. Here's the 12:45 open. $12.45 open. And power of three. One concept or one aspect of power of three is you always want to be buying below the open, and you always want to be selling above the open. That idea applies to 15-minute candles, hourly candles, 4-hour candles, daily candles, weekly candles, monthly candles, because prices is fractal, right? And that's just something that you just have to drill into your head, is that prices is fractal. And yeah, so that was my trade for today. Very, very easy trade setup. I would give this one an A+ setup just because I know why we created that bullish 15-minute power of three. I have higher time frame objective, which is that Asia's highs. There's no SMT between the markets. This specific trade here, there wasn't any time frame alignment. I was taking this purely based off of the 15-minute model, but I allow myself to take the 15-minute model if I know why we created that 15-minute power of three. And like I said, I knew the reason. It was because we came into a 15-minute fair value gap, and the objective of this trade was quite clear to me. So that gave me confidence and conviction to hold the trade. Let's talk about my emotions during this trade. I didn't really have any negative thoughts that was going through my mind. I was actually pretty I was pretty calm. I was pretty calm. I was able to, really focus on the markets and really view the markets as just simply information, because like I said, I'm really practicing on just straight up executing. I'm content. I was content with the outcome. Like I said, this trade could have been a losing trade and I would have been fine. It's just like, as traders, we're just simply observers, and now I'm really just getting into that mindset of just simply executing on the model. And yeah. What else do I want to talk about? Oh, the standard deviations. So I also wanted to incorporate standard deviations more this week too, because standard deviations allow me to take partials, and it kind of allows me to see how far prices could go. So if I were to take this swing high here, right? Notice how it kind of aligns with the negative 0.5 standard deviation. So this, to me, this buy side level becomes a clear draw of liquidity whenever it's aligned with the standard deviation. And same as Asia's highs as well. This negative 1.5 standard deviation aligns with Asia's highs. And the standard deviation I used was basically from the retracement leg. So when prices retrace into that 3-minute fair value gap, I basically just took the low to high, swing low to swing high, and then I just projected that price range. And I do believe my final take profit here actually was the negative 2 standard deviation. And then I'll show you guys my executions. Here it is. So I bought 25 contracts here. I took off, I believe it was, I took 13 off at this swing high here. Actually, I'm sorry, I took 13 off whenever prices took the 50-minute high. I took 6 off at this swing high here. Asia's highs, I took off 3, and then I just slowly take off, started really just taking off partials at the standard deviations. And then my final take profit was this negative 2 standard deviation here. So yeah, that's probably going to be all for the trade recap for today. Thank you guys so much for watching, and until next time, peace out. Boom.